Hey guys, just you guys can hear me, right? Or you should be able to. Farzy, I just seen your message in the group chat. You should already be in here, I believe. Uh, okay, I see Rock in here now. Oh, it says admin. Oh, it's in the waiting room. Okay, jeez. Hey, there we go. Hey, that's better. Yo, yo. Can anybody hear me? Oh, you okay? Okay, now I see the chat. I had no idea that there's a waiting room, and I had to approve all of you guys. So that's my apologies. um, all right. Wait about another minute. We'll see if anybody else shows up here. I think we're. Oh, there's another one. Okay. See about half of the people in here. Thanks, Rock. Yeah, I had no idea of it in the waiting room. I'm sitting here talking. I'm like, can anybody hear me? Can anybody hear me? And nobody's replying. And then yeah, and I see it says waiting room, and I had to admit you. So it's like going to the hospital. All right, I'm gonna give these guys another minute for anybody else to join, and then I'll get started here. I guess before I get started, does anybody have any like questions or anything that they want me to cover specifically before I get started? We can wait for the end as well. So either or. All right. So I guess we'll just get started here. First of all, you guys can see the screen. It says I'm screen sharing, but I just want to make sure. I don't want to start without that. Okay. All right, guys. So, as many of you know, I'm Troy. I'm with Rock here in TRT. Asked me to do a futures class here, so absolutely would be honored to show you guys what I use to trade every single day. Obviously, I'm trading futures here instead of SPY QQQ options. But basically, I trade what are known as ICT concepts. ICT standing for just the guy that like kind of came up with them. Stands for inner circle trader. Doesn't mean too much. That's just what the guy goes by. But basically, we basically use FEGs and swing highs and swing lows to determine where price is going and how to enter and exit the market. So basically, we're looking for like these swing lows. Um, for possible reversals. Why are we looking for these swing lows? Well, anytime like when you were learning to trade or you watch some random YouTube video, what does it show you? It shows you to take a long here, take and then put your stop loss below the last swing low, right, or the swing high if you're looking for a short. So under these concepts, it's basically you are looking to attack and take positions to these highs because this algorithm that is the market here is simply a liquidity seeking machine. Obviously, we all know the market is designed to take our money. So the market is going to do exactly what the opposite of what most us retail traders are going to expect it to do. So like if somebody takes a short here, they're like, oh, this is resistance. The market should not go back up here. What does the market do? It goes back up and takes that high, right? So like for example, so when I'm looking at swing highs and swing lows, I'm looking at FEGs. FEGs, if you don't know, are like this. FEGs are formed this. So you have an FEG is made up of three candles. You have one candle, two candles, three candles here. The middle of this is your fair value gap. Basically, I look at a fair value gap as the best analogy that I can come up with is like when you roll paint on a wall. You like roll up. You know how some of the paint, like by the time you get up here, some of the paint's missing. Well, look at it this way. The market needs to basically any like anybody that's trying to enter the market here. uh, the market was moving so fast here on this day that the market needs to rebalance this fair value gap here because there were orders in here that did not get filled. So it's kind of like a roller. It went up so fast. The market needs to come back down and then refill it and then fill those orders, and then you'll see the market push back up higher. So that's just like the definition of a fair value gap, and then you kind of see like a bearish one would be. I'm trying to find a good example, that one that actually that is a good example here. So I guess there's the really good ones here on the daily, but a bearish one would be like here. um and also these concepts work on every on like any single like thing that you trade. Crypto, QQQ, SPY. I just happen to trade futures, but like this would be a bearish one here, right? Because you have down, you have a gap here, and then this and the third candle here. So what makes this is you're looking at the first candle of this this here. This wick does not overlap this wick, so that is your gap. So like if you look right here, there's a tiny one here. So it's like a fair value gap, but it's a little small, so we don't like hold much to that one. I'm trying to find one that's not one. So like right here, you see how these two candles are, how these two wicks overlap. There's no fair value gap there. There's a fair value gap here. There's a fair value gap here. Another thing with fair value gaps is they are draws on price. So whenever you see a fair value gap like down here that hasn't been filled, more than likely at some point in time the market is going to come back down and refill that fair value gap. So if you look back here, like You see here it got filled. Look at this one that we left, right? Look what happened. That last big dip we had, the market came down just because that fair value gap was not filled. And then the market's now is not is now balanced, and then we push up higher. Another thing is we still have one more down here, so like at some point in time, I could see the market coming back down here, and then coming back in here. But that just gets more into like my overall bias over the like following year and whatnot. But we won't go that far. Um, but so the thing is, fair value gaps are great because they show expansion. When the market is making fair value gaps, it's showing you the market is reaching for liquidity, right? It's telling you that okay, we made a fair value gap over this high. The market is going after a liquidity level, a daily high that is much higher than this one. Otherwise, the market would have done this. The market would have taken this high, and then what? The market would have reversed back down and most likely swept a daily low. The biggest thing is our daily highs and daily lows are huge liquidity points, and as well as our weekly highs and lows. If you look at it, almost every single day, you'll see we sweep a daily low or a daily high. Obviously, sometimes we have like inside days, but almost every single day you'll see a daily high or daily low swept. So if we ever sweep a daily high or a daily low during the day, I no longer want to look for positions that go below there. So I think it happened a couple days ago. I'll show you guys that, but I see this example right here. Like look here. Anybody that longed this in this daily candle, their stops. I'm talking like big money. Their stops go here. Look what happens. Market sweeps down. Stop rate on that on the previous day low, and then right back up. So and then obviously we start getting fair value gaps back up, and all this started off of the daily FVG down here. These daily FVGs and swing highs and swing lows will give you a daily bias every single day. So you see like kind of here we dig down into this one. This is what sent us up. Here ES is an even better example right now. Like a couple days ago, obviously we dug into this one. Same as NQ right now. Daily FEG is still open down here, so I think we our next dip could give us some kind of 50%, which I'll get into 50% here shortly. But look where our 50% kind of lines up here, right off that daily low and down to that daily FVG. But we'll get there shortly. But it looks like this was today's candle, right? So ES is going to have a daily FVG. So the way I use FEGs is not just like, oh, we're expanding up here. I expect us to keep pushing to up here. So like if we don't reverse off this high, then I know that I know ES is most likely targeting this next daily high. And then I can get out of my, like if I'm in a trade or something, I can target this high and get out in case that's the liquidity the market's after, and then we reverse. But then if the market keeps pushing higher over that high, it's telling me what? There's nothing else the market's going after unless it's this next daily high. It's literally all about displacement over previous highs, showing us that the market wants to continue higher. So the way I also look at daily FEGs, so that's kind of like the basics. You're just basically looking for daily highs, daily lows, and then obviously you can use it. Time is fractal, right? These concepts work on, you get 1 minute FVGs. We take those on the daily, but you can use those to kind of show you where price wants to go. So like we have this daily FVG that we just formed here on ES. This is today's candle. It just closed. So now we have a daily FVG. So tomorrow, I'm expecting price to dig into this daily fair value gap. If this holds and we start getting displacement back up, what am I going to target? I know absolutely we're going back up here, and guess what? We're going to put in another all-time high. However, if we go through this tomorrow and we close down below this, we expect FVGs to to hold price, right? If they don't, what's that tell us? It tells us to expect the 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 next low. So basically, it's like, okay, this doesn't want to hold. There's nothing else here that price is going to go after. The next big liquidity point to stop people out and get liquidity into the market is sweeping this low. And then we'll look at this at daily FVG. If we're coming down and this one doesn't hold, guess what? We come down to this FVG that hasn't been rebalanced yet. We get a 50% retrace. Okay, I'm going. I want to answer. Let's see who. Let's see Jimmy's question. How far back will you look before you invalidate an FVG? Say there's an FVG not filled 2 months back. Is that still valid? Yes, yes. They're completely valid. No matter how far back you've gone. Um, so basically that's it. Like right now, like whenever I'm doing my like daily recap videos, I'm watching this. So ES for tonight, I'm gonna be watching this 4 hour FVG. If we wake up tomorrow and this 4 hour is getting closed below, where do I think the market's going to go first thing tomorrow morning? If this 4 hour doesn't hold, I'm looking at this 4 hour. And then if we go on to this 4 hour and then we start getting like strong displacement up, I'm gonna be bullish, right? Because we're delivering from a 4 hour FVG. So like anybody that's like lately that's like been shorting on ES, they've been shorting into daily fair value gaps. Like the last couple of days, it's like, oh, I'm gonna short here. Well, short because why? We're too high. I mean, too high is not a thing. Like you're shorting into a daily fair value gap that is literally telling you that the market wants to push higher here. We are bouncing out of these out of these gaps, showing us the market is reaching for back to all time highs, right? So um, now that I'm off of that, I want to show you. So the monthly right now is an absolute good example. Look what happened in the month of April, right? We had this monthly fair value gap. Why is it a fair value gap? This wick of this candle did not overlap with this wick. So we have a gap. Market came back down. Notice how the monthly candle never closed below that monthly FVG. We came down, filled it, and now we're pushing back up over April highs and back to all time highs here. So that's how I kind of use it. I mean, I guess not kind of. That's how I use it. Let's break this down to like a smaller time frame here. So this morning, let me see if I can find the trade we took. So data highs, which by the way, I'm sure you guys have realized by now, but data highs, data lows. This was the jobless data highs. Everyone's stop orders go here. Why? All the retail traders are trading this, and they're like, "Oh, this is resistance. This is resistance." Well, the algo's like, "Well, I know all those stop orders are there. We're going to attack that. Anybody that shorted here, their stops go here. Look what happens. Market runs up and ends up taking that high." But let's kind of break this down and see what happened. So I'm going to kind of get into SMTs here, which an SMT is it's called a smart money technique, but basically um, an SMT is when ES or NQ takes a low and the other doesn't. So right now the reason I can see a pullback on the indices right now is because of this. NQ has taken all-time highs, right? Liquidity swept. Look what happens after we swept all-time highs. We get a nice pullback. ES has taken all-time highs. We're getting a nice pullback. However, a lot of people forget about the Dow Jones. The Dow Jones here, you have to watch all three. Look at YM has failed to take the all-time high. If YM comes up and takes this high, the SMT is now broken. What's that show us? It shows us all three indexes are very strong, and that means the markets want to push higher. If two take it and one doesn't, that's your bearish SMT, and that's where we can possibly see reversals. Doesn't mean we're going to get a reversal, because tomorrow we could wake up and YM takes us high, right? And then we're pushing back up. But basically, if an SMT gets broken, we so I kind of have like a screen here. Like I usually have YM on here too, but like you can use SMTs on like any time frame, but I just started there because I wanted to show you guys kind of what happened today. So with NQ, we took a trade this morning to the data highs, right? Not sure if any of you guys took it, but notice here, obviously, what happened? We had a 1 minute inverse, right? So pretend this is the daily chart. Time is fractal. Um, GCC, I have problems seeing those when you see them. So yeah, I mean the all I can say to that is it just takes screen time. Just having all three charts up and looking for SMTs. I will say the 5 minute to the 15 minute are great for intraday SMTs, but anything more than that, then you're looking, obviously higher time frame. Anything on the 1 minute can work, but oh, get in. Has the meeting started? Oh, shoot. Okay, I see it now. Sorry, Rock. All right, he should be in here. No, there we go. Okay, let's see if he's joining. It says he's connecting the audio here. So, so this morning on the 1 minute, um, so whenever we take a low, right? Whenever we take a low, we are looking for some kind of possible reversal. This is where Dev gets really mad, right? If we if we take these lows and we keep on displacing through, kind of like the highs, right? If we keep displacing above the highs, it usually means the liquidity or the high we're after is the next obvious high or low, right? But you see, we didn't take a low this morning, but if we go to ES and look at ES did on the 4 hour this morning. Obviously, it broke through it now, but this morning, this 4 hour FVG, um, ES tapped into this 4 hour FVG. NQ didn't yet, but it doesn't matter. ES hits a 4 hour FVG. So that means we can look at NQ. So ES took these lows here, and NQ didn't. So that's our SMT. What is an SMT? In SMT shows strength, right? It shows like, oh, NQ is so strong that it doesn't even want to take these highs, but ES took those lows. Where we always look for a reversal off of lows, and then it shows strength, and then we know that okay, at least one index took a low. Now we can look for a reversal, and then going back to what I was saying, pretend this is the daily chart. These FEGs work on every single time frame. We close above it, and we target this high. So like whenever I take like a inverse like this will be the first target. Why? Because we could absolutely just be going up to take this high. This is where I'll go to break even. I'll trim, but then the ultimate target is we know data highs up here from jobless claims are a strong liquidity point, and then we obviously we I think we actually trimmed some here at this high. We went to break even, and then we rode the last one up to here. But you see, kind of here, how like there's no FEGs made, no FEGs made. This FEG was made right here. Look at this. Price goes up, closes above this high, still comes back down, rebalances this fair value gap, pushes us right back up to the highs here. And then after we take this high, this comes back down. This 1 minute FEG holds. After we start holding this and pushing higher, that's when I knew, oh, well, I guess we're gonna keep on pushing a little bit higher today, and then obviously that's where we ended up topping out today, as well as I mean that's literally like the basics. It's how I get a daily bias every single day. I just look at your 4 hour and daily fair value gaps, and I mean that's literally how I use them. I kind of have a checklist here. Is there any questions about any of that? It's kind of a lot in a little amount of time, but basically, so something else I'll say, like sometimes we'll come down and like not sweep a low or sweep a high, and like where was it today? So today we ended up getting an end of day, right? So NQ all day had this 4 hour FVG that I was like kind of wanting. So we'll draw it here, and then we'll go down to the smaller time frame. So there's unfilled FVG here. We'll go down to like the 1 minute. I thought we were gonna get it this morning, and I was looking for like I was like, Okay, well, we have this low. You know what? We have all these lows from the 9:30 open. Um, and like we kind of like went down here this morning, like 10 o'clock, and we didn't take it. And I'm like, oh, we have a 4 hour FVG right here. And the thing is, when you have a 4 hour FVG this close, price tends to draw down into it. So the fact we did not like get down to that, um, obviously it shows bullishness, but like if like this long would have been even better if we got down into this 4 hour. But what I just showed you guys, ES dug into that 4 hour and then pushed us back up, and then we took all time highs. Um, but that's why it's so important to like before looking for a long, ensure that one of the indexes has taken some kind of low, and then or if you're looking for a short, make sure like an index has taken some kind of high. That's why like lately I've been telling people, do not like, if you look at this, the market with all these FPGs is obviously reaching towards the obvious liquidity point up here at these all time highs. It's like you're going against the higher time frame trend here. The market's not going to have a chance at a good reversal until we take these all time highs. And now maybe we get some kind of reversal. Why? Because we look for liquidity swept, and then we look for some kind of reversal off like a higher time frame liquidity sweep. So um, that's that's mainly the gist of it. There's a few more things I can go into if we have time or if you guys want to see. Totally up to you guys. I have a whole checklist of things that I can go over. So, Rock, you want to keep going, or see if I don't even know if Rock's still? Oh, Rock's still in here. I guess I can go over like a few more things here for so obviously you guys know I blow up chat all the time about 50% retracements, right? 50% oh, hold on. Curious George is trying to join. There we go. Okay. All right, you should be in here. All right. So for those that joined late, this is a recorded, and I'll upload it to the masterclass chat here. But what so yesterday, so 50% retracements, right? It's how the algorithm balances oh, Zoom link above, right? Yeah. Okay. I want to make sure Dan gets in here. All right. I'll just keep going here, and once I see Dan join, I'll let him in here. So basically, like the market and 50% retraces are basically, you can treat them just like if we swept these lows. This was the CPI pump candle yesterday. Obviously, we can treat 50% retraces just like liquidity sweeps, right? Off a liquidity sweep, we look for reversals, kind of like 50% retracements. If the market is still bullish and the higher time frame draw on price, so like if we're going for that day, like the market is going after the last daily high, or a weekly high, or whatever, these 50% retracements are always going to hold. So ICT refers to this is premium above 50%, and this is discount below 50%. You never want to look for long positions above 50%. You always want to wait for it to hit 50% and then look for longs, because look, 5-minute FVG here. I think we actually took this trade yesterday, right? We had a little accumulation, our manipulation down. Look where our manipulation took us yesterday, right down to 50%. A bunch of shorts hopped on. We look for reversals at that 10 o'clock, which I'll get into here in just a minute. And then we go right back up and take CPI data highs. So it just shows like 50%. And what else do you see? 5-minute FVG did not hold price and send it lower. We closed above. So what's that tell us? To expect at least this last swing high on the 5-minute chart here. So like 50% can also be used every single time frame. I am constantly drawing. I bet I draw 50% retraces or just a 50% fib every single day. Like I'm drawing it on every time frame, all the time because like even on the 1 minute, it's perfect, especially on like trend days. It's even better because we usually get like 1 minute 50% retracements. I like to draw it from like I like to draw from here. You see, boom, we get up here. This was actually this was today. So I was actually watching this trade. But you see, you so like I said, you don't want to long above 50%. And you want to wait until you're below 50% to a long. Opposite obviously goes for a shorts. You want to if you think the market is bearish and the higher time frame draw on price is lower, you want to look for shorts above 50%. But and look where we drew to today, right here. We draw to this the last fair value gap. There's nothing else above here. If price closes above this 1 minute, where do you think we're going? It's telling me price is going back to this swing high to hit this liquidity point and stop all of these people out. So you see, price goes above 50%, last fair value gap in the leg, and then we shoot back down, right back down into the swing low here. So and then you see like same thing here, 50%, 50%, 50%, 50%, last FEG in the leg, right back down. But if we inverse that, where are we going to go? Here and most likely here. So that's just like, I mean, that's basic 50%. If we go back, like even if you go back on like the weekly time frame here, if I can get my charts to work for NQ, this is the NQ continuous contract. Like look, this is the weekly, right? Look what happened on. Remember this last downswing? That our last bearish move. We came down, filled in weekly FEG, the daily FEG that I showed you earlier. Weekly order block here, obviously. But look, right below 50% is where you want to look for longs. A lot of people hopping on shorts here. What I've kind of realized with the algorithm is by time price gets to 50%, this is when like a lot of retail traders are finally deciding, oh, now the market's bearish. Now I'm gonna short. But guess what? They end up shorting below 50%. And then that's when a lot of like the algorithm and stuff is looking to end up reversing. So I think it has a lot to do I think it's pretty cool, and like it's like it kind of explains how the market is like programmed to like mess with the human mind. Um like kind of like I guess you can look at any time frame, but the weekly is just a good example. Like by time you're like really getting fully bearish, I think the market's coming down for a good dip. The market reverses under 50%, and then we push back up. Even if we go to like I think it was NQ had a great example. Kind of like here, right? 50% on the daily. Like I said, these concepts work every single time frame, no matter what you're trading. Last FVG in the leg on this daily here. Everyone thinks we're getting extremely bearish here. Price is going back to the lows. Recession is going to happen. Last FVG in the leg shoots right back up below 50%. You're then looking for longs. You start inversing these daily FVGs up. So if once we inverse this daily FEG up, where should price go? Obviously, it went up to this daily FEG here, but if you look here, last this FEG gets inversed here. Where does price go the next day? Back up here, and then we end up inversing that back up and back up to the highs here. So 50% is just a good like gauge because the market goes there most of the time. So I think it's basically like how the market balances the market, and just keeps like buy and sell orders like equal. And I think I just lost everybody. uh, hello, hello, hello. All right, everybody's rejoining here. I don't know what that was about. You need a new link, DJ? Okay. Let's see if it'll let me invite you. Invite. There we go. I guess I was limited to 30 minutes there is what it was kind of telling me. Chat. Okay. So it's still got everything here. You guys can still hear me, right? DC trades. Okay. Give everybody a second. I don't know. It gave me a warning. It said I had to pay for the Zoom upgrade to go over 30 minutes. So I guess we'll just restart it here where I was. All right. I think everybody's back in here. All right. You guys can all hear me. Am I sharing a screen? I'm not sharing this. Is it okay? It still says I'm sharing a screen. Okay. All right. You guys can still hear me, right? Okay. Okay. As long as you guys still hear me, I guess you guys blow up the TRT room if you can't. So basically, like, oh, okay. I don't think Rock's back in. Mm, okay. Okay. Yep. You guys can hear me. I want to make sure Rock's back in here. Can you guys see Rock in here? Let's see. Oh, I can hear. Let me click on participants. Oh, Rock needs admitted. There we go. All right. All right. Rock's back in here. All right. Sorry, guys. I guess it kicks me out after 30 minutes and it may wants me to pay for the Zoom premium edition or something. But basically, I guess where I stopped was, I mean, I'm just like, I could think like like I said, this is just like always be looking at your 50% retracements. Always be looking at what your FEGs are telling you. The FEGs will tell you what swing low, what swing or what swing high we are looking at going to next. So if you look here up to here, look at this 50% to the tick. We didn't fill the lower one, but you guys see we came back later, filled it in, and then obviously we kept pushing higher. We can do this over and over and over again, and you'll see 50%. Usually, if we don't get a 50% retracement, it's telling you the market is extremely bullish or extremely bearish. If we're not getting 50% retracements, but like I said, I think it's just like how the market gets into the human mind and people thinking, oh, shorts, and now I'm just beating a pretty much a dead horse now. But the last thing that I want to go over with you guys is macro times and algorithm times. So basically, um, I guess ICT has back tested this over and over and over again and kind of like dialed in what times we can expect price to deliver to liquidity. Our two biggest times of the day are going to be 10 o'clock and 2 o'clock. We are looking for some kind of reversals in the market. If we're going to, I should say, if we're going to get a reversal, it's going to come during those times. So the last few days have been great examples. And to add on to that, if we do not get a reversal, it's at 10 o'clock. It usually means we continue in that trend. Usually between 9:30 and 10 o'clock, I usually tell everyone not to trade. Wait for 10 o'clock to see what it does, because a lot of times 9:30 to 10 o'clock will be what we call a Judas swing, or another name for a Judas swing. I don't even know why it's called a Judas swing. It's just a manipulation swing down. You guys, I'm sure, have seen all my posts all the time where we have accumulation, manipulation, and then like distribution back up to the high. But basically, every day, I posted the times today, basically from 9:50 to 10:10. 10:50 to 11:10. These are, I pin these in the future channel. So if you guys, obviously, I don't expect you to remember them, but basically from 50 to 10 every single hour of the day, that's when we can expect price to start reaching for highs and lows. If you backtest it, you'll see that's when most of the time that price starts reaching for liquidity. So let's see, this is today. So today, right? So like I said, between 9:30 and 10 o'clock, we expect some kind of manipulation, like down, either whether that's to an FEG like it was today with ES, or yesterday, or it's down to like some kind of 50% retrace. But if we start reversing at around 10 o'clock, fully expect us to if we start getting displacement up, fully expect us to start reversing there. So like from nine, so like today, right? We had 9:30 here. 10 o'clock kind of gives us a little bit. So we can, I should say, like, remember what I said, 9:50 to 10:10. So this can happen anytime between then. You see, like 10:07 today is when we got it. This is when ES hit that 4 hour FEG, right? That I showed you. ES hit that 4 hour FEG right at 10:10. We expect reversal, so that's why I had confidence in that data high trade we took today. Because if we're getting these strong candles off of a 10 at around 10 o'clock, we expect some kind, and we expect reversals around that time for the AM session. Then that gives me even more conviction, along with the SMT that I showed you guys, with the 4 hour FEG. We expect this to work. And then obviously, if we go back to yesterday with the CPI pump, you guys see, obviously, we had the just a little accumulation here. And what time? Let's see. You see, look what happens here. We missed 50% of the CPI pump by one tick. I don't know if you guys can see that, but we missed it by one tick. You know, now we really missed it. But you see what happens. We're just chopping here. 9:30 drops this. Everyone thinks, oh, we're dumping, we're dumping. Nope. 50%. 10 o'clock hits. We get a 1 minute inverse. We also had equal highs up here, which we know equal highs are strong draws on liquidity. Why are equal highs strong draws and equal lows? Because people see it, retail traders see it as, oh, that's resistance, that's resistance. The market shouldn't go above there. That it's already it's already rejected there twice. So that's like double the amount of stop orders that your buy stop orders, the shorts. That's like double the amount of orders that are going to be there. Where's the market going to target? The market wants to get more money into the market. The market doesn't care about going down here. The market wants to go up here, get this money, and get this money back into the market for liquidity to then push higher. So what happens here is we get the manipulation leg down. Everyone's shorting, right? Everyone's grabbing shorts. Oh, we're going down. Liquidity is entering the market, and then we go up, and then we start ripping the shorts. This can absolutely happen, obviously the other way too. But so now you see 10 o'clock. So and then the same thing happens. We look for the same thing between 1:30 and 2 o'clock. We look for some kind of manipulation swing down or up, and then we look. And so like around 1:30, between 1:30 and 2 o'clock, if we hit a 50%, we sweep a high, we sweep a low, and then we start displacing up around 2 o'clock. And then we expect the market to move in that direction, most likely the rest of the day. And then we go back to what I showed you guys at the very beginning. If we start inversing FEGs to the upside, and then or to the downside, that shows us where price wants to go. So other than that, guys, that's like the gist of what I use to trade on a daily basis. Um, Basically, I guess the other thing I would go over quick is kind of like what I've been showing you guys the last couple of days. The market the market is made up of these market maker sell models and market maker buy models. You'll see how we got this like nice curve here. This is the sell model. Sell models take us down to where I showed you that daily FPG, down here, and then we start reversing. These sell models don't complete until like the wherever that sell model started. That's where it's going to finish. That's why I've been confident in these all-time highs hitting ever since we started getting these strong 4 hour and daily candles off of the lows. So um, it's like, and what makes up these larger time frame buy and sell models, if you go down to like the 5 to 15 minute chart, that's where you get your intraday, like five minute in your 1 minute. So these bigger models, these bigger 4 hour sell models and buy models are then made up of like 1 minute and 5 minute market maker buy and sell models. So like today, we had a great example. So you I guess a great example would have been the data highs this morning, right? We got a nice curve here. We get this right up, and then boom. It just like, I don't know. It's just hard to. It's just like a bull. It's like wherever it starts is where it finishes, and then like, but it in the grand scheme of things, it's literally all about going back up to that previous high or that previous low. You know, you're either your sell model is going to be, a big hill, or it's going to be an upside down downhill. So, um, but basically, what I've taken out of ICT concepts is like I know like Rock and all of them use like you guys all use like your retail patterns, like your head and shoulders, your inverse head and shoulders, your bull flag, your cup and handle. So what I have found with ICT is like those concepts, like what you guys use, are fantastic. I mean, they work, right? ICT concepts, I think, just like defined what those why those concepts worked, right? Like a market maker sell model kind of looks like like an inverse head and shoulders, to where like you have like down here the mark, like, and then like the shoulder would come up, fill in an FEG, or I guess it would be up here, fills in like an FEG. The head of that inverse head and shoulders would be where the daily FEG hits, and then it's just trending destroyed a minute. um, Rock, but like, I mean, that's just the way I've kind of looked at it. Like retail patterns are just, and then ICT, it just explains why and where we bounce from those retail patterns. So like the shoulder would be like the last move, and then the head would be like the final liquidity sweep, and then like the right shoulder would kind of be like, I don't know, like kind of like here it comes down, makes the right shoulder, comes down, fills in the rest of the FEGs or the order blocks, and then off we go. Kind of like what I'm thinking here, like, right, we gonna have like a big old cup and handle, right? Cup and handle. We come down, we get some kind of 50% retrace, right? And then what do you got? You got a cup and handle, right? So I just think it's so interesting to, that's how like it's like this is, I think, it just kind of shows how and why these concepts like to work. So with that, I really have nothing else for you guys. I'm done with my list that I kind of wanted to show you guys. Does anybody have any questions? It's quiet. It's quiet. Dan, I basically went over inverses and how I go about getting like a daily bias. The whole Zoom meeting was recorded, so and I'll post it in the masterclass chat. So anybody that wasn't here, I don't think everybody was here, can go back through and go through it. So when drawing your retracements, are they over specific periods of time? So it's actually a very good question. So whenever I'm drawing my retracements, I'm looking at them on every time frame. So my favorite is always to look for like big moves down or big moves up, kind of like here, right? Like we get such a big down candle here, everyone's hopping on shorts. What's the market gonna do? I'm looking at 5% at that at like the 5 minute here. Um, I'm looking at the 5 minute here, right? So this is one of my favorite things to trade. Everyone's short here because they're like, oh, big red candle here. We can go down, but look, we end up sweeping all these lows. It gives the market a reason to go back up higher, 50% up into the 5 minute. But so basically, I guess so. I guess what I'm trying to get at is like I'm drawing 50%. and my fibs on every single time frame. I'm always looking at the 1, I'm always looking at the 5, and I'm always looking at the 15. Um, so like here, like, oh, I see we're starting to get some kind of retracement. Maybe there was like so there's obviously there's no 1 minute FEG that inversed, but like this is where I'm expecting like some kind of some kind of retracement to 50%. Let me see if I can find a better example. So there was a good example a couple days ago. So let's see, where was it? So kind of like here, you see like big down, big down, big down. This is where I'm like I'm starting to like lick like I'm like I think I can probably find a trade out of this because like the market should retrace here because like whenever like we sweep a bunch of lows, we fill in this 5 minute FVG that wasn't balanced. Like these FEGs don't mean we're going back to the swing highs, but they could be like moves that can keep us going back up to 50%, right? So I guess I'm just drawing on the 5 minute, and most of the times, whenever you draw your retracements, usually there's going to be in unfilled FEG, whether it's a 1 minute, a 5 minute, or a 15 minute above. So um, kind of like let's see, I think today. So kind of like today, right? I was watching this. I was watching this 15-minute FEG here, and I was like, I don't know if we're gonna keep going lower. Why? Because we end up sweeping this low. This low doesn't mean we're going back to the high, but we sweep this low, and look what happens. We had a 15-minute FVG that formed here, and I was like, well, we I know the market likes to draw back to FVGs before continuing the trend, so this might be a good spot to look for a short, and then I'm drawing my 50% here, and I'm like, okay, if this is going to reject, it's going to be in this 15-minute FVG above 50%. But if we close over this 15-minute, then I know we're most likely going to run this nice little LRLR here, or downtrend, bull flag, whatever you want to call it. Um, but you see, we don't. We end up rejecting it above 50% shorts, and then right back down to the swing lows. But basically, to answer your question simply, I'm drawing it on every single time frame, always looking at 50%. Um, breakers and, mitigation blocks, I tend to not use breakers and mitigation blocks very much. Um, breakers are basically just like prior highs are like prior resistance turned into prior resistance turned into support, right? So I mean, I guess you could say like, okay, if I guess this is the weekly chart here. I think ES had a very nice. Let me look for it here. So breakers for basically, trying to find it here. So basically, breakers are when you take a high here, right? If you take a high, close above that high, or if it takes a high and then it takes a low, and then it closes back over this high, this becomes your breaker, or as you know, other people would call it, a prior resistance. Price closes above here, you then look for price to come back down here because there's going to be stop orders. There's also a daily FEG, which is kind of what ICT refers to as a unicorn setup. Basically, because you have a breaker working in your favor, you then have a daily FEG working in your favor, and it's just something you don't want to be shorting into here because there's a very high chance that the market came back down here just to balance this and then push back up higher. Yeah. So you won't make a trade until after the 50% and find an FEG to see where it's going. Yes, absolutely. So that's why like whenever we take a low or whenever we take a low or take a high, I'm always waiting for an FEG to tell me. So basically what I showed you guys earlier. Let's see here. So this is something that could have worked. When was this? This was 2 o'clock this afternoon. Actually, you see, we took a high. We took this low here. Liquidity was swept. Liquidity was swept. That means we can now look for a long position. what happens? We end up closing over this 1 minute FVG. We end up taking a high. Obviously, we come back down. Notice we did not close back below. For an inverse like this, your stop is usually if we close back below. Um, if you didn't go to break even, then you hold. But look where price drew to. We hit 50% here. This is where I probably would have went to break even and trimmed, and then I go back lower. But this is another example, like where you can obviously I actually alerted this, but I said I'm taking this 1 minute inverse, but you see we closed back over and we hit 50% already. So it's I don't know if we're going up to 50% to then push lower. So I didn't even enter this trade here, but you see. Inversing through here takes us up to that 50%. So what else? Can you talk about breakers when joining retracement? So thanks for the great info. Can you give me an example from today when it would make sense to short long based on where the market's closed today? Are you talking like for like tomorrow? I'm assuming that's kind of what you mean. Yes, tomorrow. Okay. So let's see here. I guess the futures market's opens here in 3 minutes here. So say we are so say tomorrow, or I guess when we open in 3 minutes here, I'll probably still be on here, but we should dig down into this unless we gap up here. If we gap up, I still expect us to come back down into this daily FEG. Why? Because we expect daily FEGs to get rebalanced at some point. Um, so tomorrow, I guess well, don't mind that. But say tomorrow we get a move down into this daily FEG. If we move down into this daily FEG and we wake up tomorrow and we are and say we we dig down overnight. Asia, London digs down here. Make there's like an FEG, like I don't know. We'll say there's an FEG here, right here. Let's make this a different color. This is your FEG, right? But we're in the FEG. If we wake up tomorrow and like 10 o'clock, digs down a little more, fakes price, whatever. If we and say this is like a higher time frame, because like when I'm looking at options for like swings and stuff, I'm looking like 4 hour inverses for option swings. But like say this is like a 5 or a 15 minute. If we close above this tomorrow, basically this is your confirmation entry. You don't just want to long like options or futures just because we're in a daily FEG, right? Because who's to say we don't come down to this lower FEG first? Why would we come down here first? Well, I guess if we draw our swing here, we're still longing above 50% here on the daily. So the better long would be down to here. But sometimes the markets are just so damn bullish. We don't even get that. But so what we do is we wait for a confirmation entry. A confirmation entry is, oh, we know we're in a daily FEG. We know we can be bullish. Let's wait until the markets show us that it wants to be bullish. By showing us that is that the market's bullish, it's going to start inversing like so you see right here, right? We I guess I didn't draw my FEG right. This is the FEG kind of starts here, right? But so if we dig down here, when say we make an FEG, if we wake up tomorrow and we're inversing this 15 up, what's it tell us? Most likely, we want to go back up to either like Asia or London highs, which are also good liquidity points, by the way. Not just your New York days and highs. But if we are like inversing a 15-minute FEG up or an hourly, you know what that means? We're gonna push higher. So that goes back to like what I'm looking for, like like a higher time frame bias. Like, does that make sense, Farhan? Like basically, if we get some kind of inverse to the upside while in this higher time frame FVG, such as a 4 hour or a daily, that's your confirmation entry that you can then enter there, and then your stop loss would just be like this is the FVG. We obviously we make the FEG here. If we close above, but we close back below, that's where you would exit because that means that FEG didn't hold, and now most likely means we're going back for these lows, and you should exit your position. So if you start seeing FEGs being disrespected, one, it's either choppy ass price action, or the FEG didn't hold, and we're going to continue lower. So that's basically just that's just what I look at on the that's that's how I get my confirmation entries, and then like that's how I get like everything else. So like today, I was Dev asked me, he's like, "Do you think we're a bullish here?" And I was like, "Dev, I'm watching this hourly FEG here." I was like, "If this holds, we're obviously going to push higher." It held for a little bit, but you see, we ended up the 1 o'clock hourly candle closed below. It told us what? It told us we were going down to this high. So once we close below, you could have grabbed Q puts and erode it down at least down to this low. Or if you were convinced we were going on to the 4 hour FEG, you could have wrote it down to the 4 hour FEG because we know price wants to go to those FEGs. So um, that's what I look for every day, guys. I hope this was very informative for you. I love teaching this stuff. I love this trading stuff. But um, any is there any questions? If you don't ask a question here, my DMs are always open. Always happy to teach anybody or show you guys everything that I've back tested, learned, and what how just this is what I use to feed my family and stuff. So, any questions at all? It's quiet. The Good question, RS. It's a yeah. So I like the volatility a lot better. I used to trade just ES, but ES is just a little slower. But it's because like for every like point that ES moves, NQ usually moves three, so you're actually getting like because it's like almost three times the size. Actually, it's actually four times. I guess 5,300. What three and a half size. So I don't know. I guess NQ it's just the volatility. I guess it's kind of like trading. It's kind of like going from SPY to and then going to trading $1,500 Tesla back in the day. It's just the volatility is a lot better, and I try to get like one or two trades with NQ and then be done for the day. So yep, but kind of like whenever it's like maybe on like a Friday or something or a trend day, I'll grab ES and I'll just ride ES kind of like an option play, and it's just just ride the gravy train up or down. So that's why. But all right, guys. Well, if there's no questions, I will end it here. Like I said, if you guys have anything, just throw it in the chat or shoot me a DM, and I'll be absolutely glad to help all of you guys. So appreciate you guys. Thanks for hanging out here, and we'll catch you guys in chat.